care to move it, let's see what would have happened. And we just said, you know, we're going to look for another entry up here. Let's play that. And look at that. Market came, tagged that in. Yo, what up, man? It's your boy Rick, aka Iconic. Right now, you're looking at a chart of US 30. I'm just going to be back testing. I'm always back testing. Also, I do have a challenge that I'm doing for the Fivers 100K. They made a lot of changes, to be honest with you guys. But I mean, one being the pricing is a little bit more expensive, not that much, not by a lot. In terms of euro, I think it was like 85 euro, now it's like 95 euro, but they've changed a lot. One thing being when you hit 125,000, so once you increase the account, let's say by 5%, and you hit 125K, then your start to split, I think it's 75-25 versus it was 50 all the way to like 300,000. And they added a $250,000 trading account as well. So you can get a $250,000 challenge. Just pay a little bit up front, and then on the back end, if you complete the challenges, then you get the 250K. Anyway, so we're gonna do a little bit of back testing. I do have some rules I did come up with, and I'm gonna bring that up right now. I'm just gonna have you guys glance at it. I'm still writing it out as I go, but you know, see the iconic plan. I'll just read it over real quick what it says here. Number one, we will develop a trading plan with clearly defined rules. Number two, we will not risk more than 1% on non-A plus setups. Every trader should have an A plus setup. You can't just be randomly trading shit. The A plus setup is the one that you see continuously. It's a high probability trade. That's the one that you're gonna go ham on, so to speak. Still use, you know, proper risk management, but not necessarily one. Maybe you could go up to 3 or 4. Just kind of load it up if you're in profit, right? Use your stop loss. And then for your non-A plus setup, you know, those are the ones that, you know, you see it. It's probably like your BNC setup. You see it. It's here. It's there. You're not. It's not a high probability, right? I guess you get the point. Number three, we'll focus executing our trading plan consistently. This will become habitual over time, right? So over time, if we continuously look at the same plan, trade the same method, maybe 30 days or less, that will become a habit for you to see, not to only see the patterns, but to trade the patterns, right? You're gonna see them. You're gonna see what time frame they fall on. You're gonna see what time of the day they fall on, because there are patterns that only show up at a certain time of day during a certain trading session, right? All right, so here we go again. All right, before we can determine how and what to trade, we first need to decide what session we will be trading. The bolded session will provide better opportunities and less range trading, less whipsaw. So we have the market sessions here. We have the New York sessions, which is 8 a.m. to 5 p.m. Eastern and 1 p.m. to 10 p.m. UTC. We're not going to trade the Tokyo session. I mean, to be honest, sometimes you do get some good trade in the Tokyo session, but let's not focus on that right now. We have the London session, which is 3 a.m. to 12 noon. And then, so we read all of that. Now we're going to go to step one. So step one, we need to determine the big picture. We're going to be using the H4 and the daily. I mean, I like the H1, so I guess we can throw the H1 in there. What we're going to be looking for is the market trending, or is it in a trading range? Any important supply and demand areas, any rejection candles off support or resistance. What's the daily bias? When you look at the market, what do you think is going to happen? Sometimes you could look at the market and the market might not be trending, but it might be, how you call it, the sentiment might either be bearish or bullish based on maybe some news that came out. So the news came out, it kind of broke structure a little bit, and it just starts dropping. You might see multiple black candles or red candles, multiple green candles or blue candles, whatever color candles you use for bullish or bearish, right? So that doesn't mean the trend has changed, even though it broke structure. Just could just be a sentiment shift based on what's going on in the news at that moment, which the banks are using to, you know, bring that price higher or lower, so to speak, to the area that they would like to buy or sell from. Okay. Number two, intraday technicals, H1 and 15 minute. You can go lower if possible. short-term support and resistance levels, highs and lows, Fibonacci levels, FVG, which is a fair value gap, order blocks, or BBBs, which is bullish, bearish, bearish, bullish, bearish, bullish, bearish, bullish patterns, or bearish, bullish, bearish patterns, right? My alarm. Give me a second. You already know what that is. Time to go Ubering. Actually, I gotta go get gas at BJ's. So where are we now? So number 3, the trading strategy, right? What strategy will be used to enter into the market? Right here, as you can see, I have LGQ, which I dub as the liquidity grab, with a break of structure and a pullback to the 45 or 50% Fibonacci, or to the 68 or 78% Fibonacci. That seems to be working for me, so I'm going to keep doing that. Candlestick pattern on the H1 chart, morning star or for long trades, and evening star for short trades. And the morning star, obviously it says for long trades, so that means that's at the bottom. So when you think morning star, you're thinking obviously the sun is coming up, sunshine is rising, it's getting bright, market is moving to the upside. Evening star, night is coming down, it's getting dark. That's what that is, right? Entries and take profit. So again, I'm still kind of tweak this, so my spelling errors might just have verbal writing errors. It doesn't even matter to me, really. So let's look at the step number 4 here. Entry on LGQ setups. We can place buy/sell limits, or just enter once price is showing signs of weakness, / prints a rejection candle such as a hammer or shooting star at our fib levels. Stop loss. If we enter off the 45% fib, our stop loss will be placed 10 to 35 pips below the 50% fib. Stop loss will be based off what time frame we're trading on and how much. So that's how much, I think. Yeah, how much is our broker spread? Does that even make sense? Yeah. All right. Take profit. Take profit will be set 1 to 4 risk to reward ratio, which typically aligns with the high after the market made a pullback towards our entry. Note there will also be predefined fibs levels that can be used for take profit. Okay, so right here, these are just some of the markups, some of the trades that I was looking at. Some I took, some I honestly didn't took. This was just some back testing. I was trying to see if the strategy worked. So I could see here the market came down. We had a liquidity grab from this candle here, this one here. Market pushed up. Once we see that, we're going to go from the bottom of the liquidity candle to the top of the, I guess we will just say market high at that time. Wait for the market to pull back. Now, we really don't know if it's going to pull back to the 50 or the 68, 78% level. This is just, what trading is. So you might put it in here. Again, like I said, look for the rejection. As you can see, that's a nice rejection candle. Or you can just go ahead and set your entry here. And if you're not certain of if the market's going to, about if that's the right entry, you can just wait for the 70, 78. Or you can put your stop loss way down here, right? And then we just set our take profit. Here's another trade right here. It's kind of similar to this one, right? LGQ, liquidity grab, market pullback into 50%. Here's another one here, liquidity grab, break a structure. The market has to break structures, right? If you look, break a structure, and that's where we're gonna get our high candle. So market broke structure here. So we did the Fibonacci. Unfortunately, that deleted it. We did the Fibonacci. The market pulled back into this level. Market shot up actually. And then on this one here, similar. This one is a double bottom, break a structure. We drew the fib from here to here. Market pulled back, and there we go right there. Okay, there is another one here. We have equal bottoms. I guess you could, I don't want to label it double bottom because it's multiple candles, but market broke structure. We draw the fib, wait for the market to pull back. Boom, into the 78. We got that, this, I guess we could say it hit profit, right? Let's just leave that alone. Here we go again. And if you notice, this is the 15-minute chart, 15-minute chart. This is the 1 hour chart, 1 hour chart, and then we have the 1 hour chart, and then 15-minute chart. And then for the last one, you get the point here. Liquidity grab by this candle. We take the Fibonacci from the low to the high. Market pull back into the 48. That's well, at one point I was testing 48.58, so that's why that says that right there. But it's 45.50, but it doesn't matter. It still would have hit it. And then we set the stop loss, and then we wait for the market to push up. Risk management, plain and simple. How much am I risking? How much can I risking on each trade? How many lots am I trading to keep me with my risk parameters? All right. So now that we read that over, I'm just going to go ahead and minimize that. We're going to head back over to this candle here, to this chart here, US 30. Actually, let's try something else. What's this? This is the US dollar Mexican peso. Let's push this out the way. I'm just going to do one because I need to go get gas and get out of here. So we're on 15-minute. Let's replay this. Double click. All right, so let's take a look at what's going on right now. So as soon as we look at this market right here, right, we notice that market broke structure here, right? First, we actually had a little liquidity grab up here. Right? But I'm more focusing on this since that's where the bulk of the move is. And since we got this break and we started to get this pullback, let's take a look at our Fibonacci and see what's going on and see if we can get into this trade. And we're trying to get into the short. So right there, the market did push into the 68.78 level. Let's just go ahead and mark that off. Okay. 68.78 fib. And then we have some possible take profit down here. Okay. Let's mark that off. 68.78. That's the take target. And I have one more target down here. How did I come up with these numbers? What I did was, once I noticed where my retracement was, I pretty much just followed the market and see where it rejected, and then kind of inputted numbers to get to that level. And it's just so weird that it came back with a 178 and a 168 negative numbers, right? This trade right now, this double bottom is kind of concerning for me, but I'm gonna still go ahead and take this trade. I'm just gonna act like I just took it, right? Because I probably would have gotten in somewhere over here, but let's just go ahead and we're just gonna set that take profit way up there. Not the take profit, the stop loss for right now, because I feel like the market's gonna pull back a little bit, but so that's a 10 to 1. All right, let's set it right there. So now we're looking at a 12 to 1 risk to reward ratio. Let's go ahead and hit that play button. All right, so the market tagged right there. Let's go ahead and play. All right, I'm gonna put this on the H1 so we could just minimize the candles. Let's push this out a little bit. So right now, you can choose to move to break even, right, to reduce your risk of loss, or you cannot. I mean, it's really up to you how you want to trade that. You know, I don't mess around when it comes on to moving to break even, but sometimes I end up just getting stopped out and the trade move. So I don't know. It's up to you. You have to decide what works for you for your trading account. All right. Let's go ahead and hit play. All right. Boom. Look at that. All right. So the market just came down slightly and then tagged up. Right. So that's 11 to 1. Let's continue to just hit play and see what happens here. And remember now, that went really fast, right? But you would have been monitoring this. And as you see it come down and you probably get a rejection, you probably would have gotten out of the market. But let's just go ahead and see what's going on. And another thing, sometime the market will come back into the 50 or the 70 to give you another opportunity to go short. So let's go ahead and see if we could get it somewhere up here or here, and then we take another trade. Hit play. All right. So it pulled back, stopped us out, because I'm assuming we would have either at break even or we would have took more profit. But just assume, if you will, we're at break even, it would have stopped us out. If we had the stop loss up here and we didn't care to move it, let's see what would have happened. And we just said, you know, we're gonna look for another entry up here. Let's play that. And look at that. Market came, tagged that in. All right. So like I said, I'm about to go do some Ubering, guys. I'm gonna stop this video here, and then later on, I'm gonna come back when the market opens and show you the funded account. Well, it's not funded yet, but I'm gonna drag it over real quick. So this is the account right now. Actually, oh shit, my my computer. I think I lost the recording. Ah shit. I don't know how to move this thing back over to my screen, guys. My computer unplugged, so my monitor got unplugged, but I don't know how to. Alright, so I'm gonna just go ahead and stop this video, and I'm then gonna edit that out, and then a little bit later I'll upload a video with the trading account.